Hey, what's up, everybody? It's Tuesday, June 16th. What's going on? Another big day up in the stock market. Dow up over 500 points. We've already recovered, I think, 500, 650, 11, 1200 points of that 2000 down point, that 900 down point move. What was it, last Thursday? So, nice bounce. We had a really big May retail sales number today, up 28 billion. That was an all-time record 1 week increase, 1 month increase. It blows everything away historically, but of course, you know, we had the economy opening back up to some extent, a lot of pent-up demand. The money was sitting in bank accounts. So yeah, you have to expect that. It was a 17.7% increase from April. That is a record 1 month increase, but again, it's coming off of a low figure. You have to expect that with the economy opening back up. So, I mean, I continue to see sort of conflicting numbers here in the stuff that I look at, which are the fiscal flows. The overall flows, the spending, massive, unprecedented. You know, I've been telling you that. We know that. Like huge increase. I think now it's something like we're almost 1.3 trillion above where we were at this time last year, and this time last year was already a record spending year, and we're, you know, 1.3 trillion above, and we still have 4 months left in the fiscal year. Deficit at over 2 trillion, almost 2.2 trillion. So I mean, massive spending that's flooding into bank accounts. We see that in bank deposits, which actually bank deposits in the latest week ending June 3rd went down for the first time in 10 weeks. I don't know if I mentioned that yesterday, but that's a sign a little bit that the Fed's monetary operations and government spending, okay, is not keeping up, and loan creation. So government spending, loan creation, and the Fed's reserve additions now, its monetary operations, you know, its asset purchases, not keeping up with the sale of Treasury securities by the Treasury and tax payments. All right, so you're getting a net withdrawal of deposits. Now, deposits, I always look at deposits as the so-called, you know, the cash on the sidelines. You always hear about there's a lot of cash on the sidelines. There's a lot of cash on the sideline. There is. There's almost 15.4 trillion in bank deposits, and that really ramped up in the last 2 months, 3 months. That ramped up by over 2 trillion. Money on the sidelines. But now we see that for the first time in 10 weeks, you know, a little withdrawal there. So some of the flows are slowing down, at least when you look at it in total. That is the flows going in, and then the sale of treasuries and tax payments. Just a little thing. It wasn't a big pullback, but I'm just mentioning this. You know, you had 13 weeks of a build in those bank deposits. Now it looks like they're starting to siphon down a little bit. Look, we could easily make a new high here. The only thing holding me back at this point really is when I look at some of these sentiment readings, particularly coming out of the put-call ratio. The 10-day and the 20-day average of the put-call ratio is now at the lowest level in 6 years. Okay, you got to go all the way back to 2014 to see the 10-day. And so we went, check this out. We went from a hyper oversold condition in late March to now a hyper overbought condition. I mean, it's just like, if you look at it, it's like up and, you know, way down on that put-call ratio, the 10-day and the 20-day average. But that doesn't mean it can't continue. Look, some of the flows, when I look at the tax flows, which I've been talking about here every single day, I mean, it's like it's mixed. Corporation income taxes definitely picked up from June 8th until now. And June 8th was when, you know, some of the bigger economies locally, like New York City, we went into phase one of the opening, and you really see a jump up in the corporation income tax flows starting from June 8th forward. However, in the employment and withholding tax data, that slowed down compared to the lockdown period. So it's kind of spotty there. I would say the flows are starting to lean more in the bullish direction. In other words, we're starting to see the pickup. Corporation income taxes. It looks like with today's data, it got a better reading on the employment and withholding tax flows. So that's a positive. But again, the market is like hyper overbought right here. Doesn't mean it can't go higher, but it really looks like pullbacks at this point right now look like they'd be a great buying opportunity if we get one. I mean, the market has a lot of momentum right now. You have a lot of day traders in the market. There's this whole thing going on with the Robinhood app, and how, you know, one guy out there who writes a sports blog, like he's, and I talked about this yesterday, he's got a bunch of followers. I don't know if it's a pump and dump scheme. I don't know if this guy is like getting a position on and then putting it out to all his followers. That would, of course, probably be illegal. That's market manipulation, but who knows? I don't know. I mean, I don't trade like that. I don't invest like that. My thing is all about a macro, big picture. What are the basic conditions? We're going to position like that. You know, we've been long since late March, early April. I got defensive now. I am staying defensive on this market. I'm looking for a pullback. You know, last week we had the pullback, and even I think a day ago, yesterday, but it was early in the morning. It was not during regular market hours. We got that pullback. I said 29.69 on the S&P. We went down to 29.35 on the S&P futures. I did not take that as I did not use that to cover any shorts. I'm still short. Maybe that's an opportunity that slipped away. You know, I deal with it. I forge ahead. I go forward. I don't cry over spilled milk. You know, if you're going to sit there and beat yourself up because you said, oh, I had a big profit and then I let it slip away, I mean, that is just destroying your mental game. That is killing your mental game. That's just sowing seeds of doubt for the next time when you do something. And you're never, you know, if you look at it like that, you're never going to be able to hold a macro position and ride it all the way to its logical conclusion. I mean, you're always going to be second guessing. You know, the next time you're going to take your profit too quick, and then it's going to keep on going, and then you're going to be beating yourself up for that. So I don't get involved in those kind of, you know, mental beatings. You know, I say, yeah, it could have been an opportunity to cover shorts and add some more longs. I didn't do it. I still have my position on. I will manage it. I will, you know, ultimately that'll work out for me. Absolutely, I am positive about that. So that's where we are. We'll see what happens. Remember, we are in a hyper overbought short-term situation. I expect to see a pullback. And again, one more thing, let me mention that nobody is talking about what happens next month, and that is the end of the COVID-19 protections. We have the lifting of the moratorium on rent payments, on mortgage payments. Taxes are due. The $600 a week supplemental unemployment benefits go away. I mean, that could be a major hit for a lot of people and for a lot of households, you know. And you got to come up with that money if you owe rent. I don't remember when the moratorium, it maybe went into effect in March, let's say April, May, June, July. You're going to have to make all 4 months of that rent payment up front. All right? And the same thing with mortgage payments. You're going to have to make April, May, June, July of mortgage payments. A lot of people are not going to be able to do that. So we'll see what happens. All I know is there's no focus really on that right now. Everything is kind of euphoric. And I say be cautious up here. So let's see what happens. Anyway, a lot more. I put everything in my report, MMT Trader. Go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. See everybody tomorrow. Bye.